Let's take a look at what's going on with Dogecoin today, guys. All right, so the last time we made a video, I was looking at this uptrend right here. I'm on the 4-hour time frame of Dogecoin on TradingView, and I was looking at this uptrend going up like that. We had support, 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 and we broke that trend going to the downside. After that, I was saying to watch the bottom and to watch the top. That's where these two lines came in from. And I was saying that breaking that trend might have been the first signal that we might be going down, and now to watch the bottom and to the top. And if we break the bottom, then we can get more confident that it might be going down. And if it breaks the top, then we could get a little more confident that it might be going up. So we broke the bottom, and that was our confirmation that it was going down. The other thing that I've been watching is the Fibonacci retracement levels. So if we zoom out, we had a big run going to the upside. We started having trouble up here. Then we actually broke a trend, something like this. We broke that trend going down. Having trouble was the first signal. Breaking the trend was the second signal. And then, so yeah, basically we had a run, get the Fibonacci retracement tool, drag from the bottom of the run to the top of the run, and that's those levels that I'm watching. The 78% level specifically, we broke that level going to the downside right here. And I talk about this on my channel a lot, is when we break it going to the downside, we look at the next one going down. So we broke that one going to the downside. Now, and in the last video, I mentioned that I had a limit order at 10 cents. Once we started breaking that going up, I was a little less confident on this limit order. I still have this limit order set down here just in case. And we broke that going to the downside. So now that we broke that, I'm a little more confident. I don't know if we're going to come all the way down to 10 cents, and I'll talk about that here in a second. But I am a little more confident about this limit order now. I don't know if we're going to go all the way down there, though. The other thing is, we have support, support, support. This was the first trend line that we started, and then we started a second one. We broke the second one right here going to the downside. Then we broke that support going to the downside. Now we're breaking this support line as well going to the downside. And this is what's making me a little more confident on 10 cents. But we also have this support right here, support, 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 giving us this trend line, which we might come down and bounce off that as well. But there's also a few other things. It's possible that, okay, so let's just delete all the stuff that we've broken. We broke that one going to the downside. We're not worried about that because we already broke going to the downside. We broke that trend line going down, and we broke this one going down as well. So let's kind of forget about those. Gave us the signals that we needed. The next thing that I'm kind of looking is, where are we gonna stop? So we're heading down right now, right? Where are we gonna get support? And we can look at the previous supports. So there's maybe like something like this where we had support, not perfect, but kind of basically this line right here sitting at around 0.1629 approximately. Let's see if we can get a bounce right there. If not, if we break this one going to the downside, the next spots that I'll be looking at are the previous supports. So let's bring that level back real quick, something like that. And we can kind of straighten it out because this is kind of like a straight line right here. I mean, I'm looking at straight lines for these support levels. So maybe something like this too, where we had the bodies come down, boom, found support right there. This level is sitting at around 0.154 approximately. And then there's also the wick right here. It wicked all the way down to around 0.142. These are some potential levels that it could get a bounce on. If we break one of them, going to the next one, I'll start looking at the next one. If we break the next one, I'll look at the next one. If we break all of them and start coming down, I'll start looking at this support right here as well for a potential bounce. But in general, like I was saying, I've been watching, another part of my strategy is the Fibonacci retracement levels. We broke this Fibonacci retracement level, this 78% level. Like I said at the beginning, we had a big run and then started coming down. I use these levels to dollar cost average in, and a lot of times what happens is they'll act as support, and sometimes they'll act as resistance, like it did right here. Resistance pushing us down, support pushed us up, resistance, pushed us down. Kind of, in general, we kind of bounce in between them, and that's why I kind of like these levels. Something like that. Support right here, resistance right there, came down, found support right here a couple times, and then pushed to the downside. And right here, it didn't really give us really support. It just kind of broke through it. So, um, like I was saying, once we break them going to the downside, I look at the next one going down. If we break it going up, then I start looking at the next one going up. And that's why I was kind of targeting. I don't know. I was kind of hoping that we can go up to .248 once we started breaking to the upside and we had that trend. But I was also saying, watch the trend. If it breaks that trend line, then we can get less confident on this target. And let's go ahead and delete that because that's no longer a target for us right now. If we start pushing back to the upside, like if we start breaking up, then we can start targeting that again. Right now, I'm kind of targeting 10 cents or these levels right here. These are possible ones that could get a bounce as well. I don't know. I've also been talking about how I think that we could potentially be going sideways for a while, and I think that might be what's happening. So let's go ahead and delete this. This is the 4-hour time frame, and that's that. Let's go ahead and delete these levels. Okay, so I think I told you, but .143, .153, and .162, 163. I don't know, somewhere around there. Maybe those will give us bounces, but I'm not 100% sure. Like I said, once we broke that Fibonacci retracement level, going to the downside, I'm kind of looking at the next one, the actual bottom of the run, which is around 10 cents. So that's what I'm looking at. A little more confident on that right now, especially since we broke that other trend that was something like this. Once we broke this trend, I think this might have been a signal that we might be kind of coming down more. There might be some more blood in the water. The other thing we can do is, let's go ahead and delete these real quick. The other thing we can do, like if you want to keep up on the shorter time frame, is there's resistance. That's giving us a trend line right there. So let's go ahead and draw that trend line, maybe something like this. Basically, we're under this trend line right here. And until we break this, like let's say we do break this trend line going up, that might be a change in direction. So like if you really want to keep up on the shorter time frame, this is the trend line that I'm watching, or that I would be watching. If it breaks it going to the upside, then maybe we can start getting more bullish. But until then, we are in a downtrend technically, getting lower highs, lower lows, something like that. But we're looking when we're going down, we're looking at the tops. And if we break those lower tops going to the upside, like let's say, okay, so we have lower tops, it creates a line. If we break that line, then potentially we could start getting a little more bullish. But until we break this trend line going to the downside, I'm a little more confident on this bottom down here, or this target down here, kind of. So yeah, that's what I'm looking at. But the other thing, like I was talking about, let's go ahead and delete this right now. I mean, you could keep it on your chart, but I'm going to delete it just so that way it looks a little more clean. I'd also been talking about a falling wedge over here, something like this. I don't know if this is... We did something very similar last year's falling wedge. So we had a falling wedge like here. Boom, we had resistance, we had support, bouncing in between those two trend lines, getting tighter and tighter and tighter. We broke that resistance, and I've been talking about this on my videos, is that we got a bounce, but we got rejected and came down. Basically, we went sideways for a little while. These are all daily candles. Each one of these candles is 1 day. So it took all these days right here for us to actually really start pushing to the ups. Let me go back to the daily. Really start pushing to the upside. We had a nice little bounce up, and then we got rejected and came down, started going sideways a little bit, and then we really started to take off. So, and I've been talking about that. Do we have to go sideways for a while before we can really start pushing to the upside? Maybe we'll come down all the way here, go sideways, and then like bounce up. Like we might have some sideways action to go through before we actually really start pushing to the upside. And what makes me think that is the 9 moving averages. So let's look at the daily real quick, and then we'll jump to the weekly, because that's the weekly is the one that I've really been looking at. like I talk about in my videos, we have this 9 moving average right here. And if we break below the 9 moving average, then a lot of times what happens if we'll come into contact with it and we'll get rejected, like it'll be resistance, and we'll test it, and if we can't break through it, then it'll push us down. If we break above it, sometimes we can get support on it and push to the upside. But if we're going in and out of it, kind of like right here, we're kind of bouncing in and out of it. And even right here, we broke to the upside, but then broke right back below it. Basically, being below it's not a good thing. Being above it's a good thing. But if we're going in and out of it, then we can look at the next time frame up. So we're looking at the weekly time frame, and I've been hammering this on my videos. Is that I want to see us break the 9 moving average on the weekly time frame right here. So we have, like over here, we broke below that weekly 9 moving average, and ever since then we're getting resistance right on that weekly 9 moving average. We're coming up to it, testing it. We're even wicking above it, but we're not closing above. Like if you go to the weekly time frame, we're not closing these candles. None of these candles closed above the 9 moving average. We went up, came back down, got resistance right at that area. Went above it, came back down. Went above it, came back down. Went above it, came back down. So that 9 moving average is basically a resistance, like moving average kind of thing, where it's holding us down. And like I talked about, when we break below it, resistance, and it pushes us down. When we break above it, like we did back here, like I was telling you, we had that falling wedge last year. We broke above it. Right around this time is when we broke above the weekly 9 moving average. And if you notice right here in this area, you can look at it on your own chart. But when we broke above it, we started getting support in it. We closed that candle above the weekly 9 moving average. This candle also closed above that weekly 9 moving average. We had to test it. We had to come back down and test it a couple times. Like these ones are testing our support down here. So we have the 9 moving average. It's coming down, testing it. After a couple weeks of testing it, we started to find support on it, and that's when we really started pushing to the upside. So what I want to see us do is the 9 moving average come down. I want to see us I've been talking about this. I think we need to go sideways for a little while and let the 9 moving average come down so we can ease into it, as opposed to trying to break through it above us. You know what I'm saying? So hopefully it can come down, get closer to us like that. Then we can kind of like ease into it, kind of like we did right here, where it was same thing. We had weekly 9 moving average. When it's above us, we're trying to like push to the top. We're not able to do it. It's pushing us down. It kind of had a chance to kind of catch up with us, and then we kind of eased into it right here. And then we started finally finding support on it and then pushed to the upside. And that's why I've been saying we might have to go sideways for a little while. So that's what I'm thinking right now. Are we going to have to go sideways? Let this 9 moving average come down. We just finished last week's candle, and we're starting a new one. So let's see if we can kind of like I said, we might be coming down to 10 cents and we might be kind of going sideways. But what I want to see the 9 moving average do is catch up with us go sideways, ease into that 9 moving average, break it going sideways instead of having to break through it on top of us. And then we can once we close above it, then maybe we can start finding support on it, and then it might push us to the upside. Maybe something like this. It might take a while though. These are weekly candles, so each one of these is 1 week. You know what I mean? We might have to be here for a while. So let's see what happens. And that's why this is what's been making me skeptical in general, is being under that weekly 9 moving average. Once we break above it, we can be a lot more confident on pushing to the upside. You know what I mean? And then we can start looking at these Fibonacci retracement levels going up. If we really want to get bearish, the next spots that I'm looking at, like I said, are the bottom of this run, the bottom of that Fibonacci retracement level. And then I also have this other orange line right here that I'm not super confident on yet. If we start breaking this 10 cent level going downside, then I'll start looking at 5 cents, which is, it's even lower. But I'm looking at this 5 cents level because when we zoom out, we have support right here, previous support. So we're looking at the history. Where did we find support at in the past? 5 cents has been a pretty good level that has held support. So let's see how low we go. If we start breaking 10 cents going down, then I'll be looking at 5 cents, but that's getting a little ahead of the game. Like that's kind of looking at this top or this top when we haven't even came down here yet. So let's see what happens. Hopefully we can go sideways. I don't care if we go down 10 cents. That'd be cool because I have a limit order there, but and then maybe we can start heading up. If we even have to go to 5 cents, then maybe, I mean, the way I see it is the lower we go, the cheaper Dogecoin is, the bigger position you can get. You know what I mean? Like right here when we started breaking, let's go back to the daily. When we broke this trend line right here, I took profits and then I started dollar cost averaging back in at these Fibonacci retracement levels because I didn't know when we were going to start pushing back up. We could have went down 50% and started running again, but we didn't. We did this thing and then kind of like this. And that's what happened over here too. We had a run going to the upside. We came, we did one little run and then we came back down and retraced. And then we had a second little pop to the upside. After that, then we started kind of doing that falling wedge pattern, and we actually came all the way down to the bottom right here, very close to the bottom anyways, at this little wick right here. Let me zoom in so you can actually see it because you probably can't see it. When we came down right here, I remember someone in the comments saying, I'm not going to put any money until we hit 8 cents, and that's basically where we hit. Basically came down almost all the way to the bottom of this run down here. So, and you can probably argue that this Fibonacci retracement level is something more like this. And that's kind of where we hit on the bottom. Not perfectly, but they called it. I remember someone in the comments saying that they're not going to put any money until 8 cents. And technically, if, you know what I mean, like we had this run. If you wanted to give up on Dogecoin and wait till it came down again, maybe that would have been a better idea. And then what I did is dollar cost averaging on the way down. But I like also playing off these moves because we got moves like that, which are opportunities for trading and just learning and kind of trying to, prove the Fibonacci retracement level in general. And that's what we kind of did in this area where we were bouncing in between them. Resistance, support, like I was telling you at the beginning. But I still like that we did break that resistance right here. I think this might have been a good signal that we didn't just continue to head down. We formed that falling wedge, we broke that resistance, and we started to head up. I think this might have been a decent signal. Same with right here. Like we broke up, and then we came down, we got rejected a little bit, and then we started going sideways a tiny bit for a while actually. But we might have to do the same thing here is basically what I'm trying to say. Got a nice little pump to the upside. Maybe we'll have to go sideways before it really starts pushing to the upside. Maybe that weekly time frame will come in, then we could go sideways through it, and then we can really start our run later. Like I said, the lower we go, the cheaper Dogecoin is, the bigger position you can get if you want to. I'm not promising anything, or this is just what I'm doing and what I'm looking at. I'm kind of showing you my point of view. So yeah, grain of salt basically is what I'm trying to say. So yeah, let me know what you guys are thinking though. If you guys like the video, hit that thumbs up. If you're not subscribed, hit that subscribe button. If you want to check out the last video, check it out right here. If you're new to trading or looking at charts in general, check out this playlist right here. It'll help get you started on TradingView. All right, I'll see you guys in the next one. Good luck, guys.